Welcome. In this video, ZBCN coin broke the big trend. What will it do now? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When the long-term price movements on the chart are carefully examined, one of the most prominent structures that catches an investor's attention is the clearly formed large-scale descending trendline. These types of patterns indicate that the price has been moving downward consistently over a long period, meaning the market has been under selling pressure. Large descending channels or trend lines like these are among the critical structures closely monitored by investors and technical analysts, as they not only reflect past price behavior, but can also signal potential reversal points in the future. Descending trend structures are typically formed by price movements that start high and continue with lower highs and lower lows over time. Within this structure, price often approaches the upper trend line but reacts downward from there again. This demonstrates the strength of the trend and its psychological effect on market participants, as most investors feel pressure under this declining line and act cautiously when considering long positions. However, over time, this pressure can begin to fade, especially when price manages to hold at certain support levels and starts forming higher lows. Signals may emerge that the downtrend is nearing its end. The most critical event at this point is the breakout above the descending trend line, as such a breakout indicates a shift from the long-dominant bearish sentiment to growing bullish expectations. A similar scenario has occurred in the chart in question. After remaining under this descending trend line for a significant period, price has finally broken above it with a strong upward movement. This breakout means much more than just a typical price bounce. It signifies not only the surpassing of a technical level, but also a change in market sentiment and direction. One of the most important observations following the breakout is that the upward move is not weak. Instead, it is continuing strongly and decisively. This shows that the price hasn't just crossed above a resistance line. Meaningful market strength and momentum are also present behind the move. Large-scale descending trendline breakouts do not always lead to strong price rallies. In some cases, price may fall back below the line, and the breakout may turn into a false breakout. However, that is not the case here. Price has managed to stay above this level after the breakout and is continuing its upward move with increasing momentum. This surge is also a confidence booster for investors, because such trendline breakouts, especially on larger timeframes, often mark the beginning of a new long-term trend. In other words, from this point on, it can be said that buyers are starting to dominate the market more than sellers. Looking at volume analysis during or after this breakout, trading volumes are usually seen to increase significantly. This shows that buyers are entering not only technically but also with strong capital. Breakouts supported by high volume increase the credibility of the trend and provide investors with more confidence to take positions. If the volume supports the breakout, the likelihood of it being sustainable is quite high. After such a breakout, there may still be some potential resistance levels ahead of the price. However, since the psychological barrier has already been broken, overcoming these resistances becomes easier. Most investors view major signals like trend breakouts as confirmation and tend to strengthen their positions as the price moves toward new highs. This increases buying pressure in the market and supports the continuity of the upward movement. Trend lines that have been tested multiple times but never broken before often remain in investors' memories as strong psychological barriers. Breaking through such lines marks the end of an era, both technically and psychologically. The new price movement that follows such a breakout often initiates a strong phase in the opposite direction of the previous trend. But we cannot rely solely on trends for analysis. Let's take a look at other metrics as well. Stay tuned. In a detailed technical analysis conducted on the chart, one of the most powerful tools frequently used by investors, Fibonacci retracement levels, provides highly meaningful insights into whether the current trend will continue. Especially by applying Fibonacci retracement levels from high to low or low to high, market participants can better anticipate where the price might stall or which levels may act as strong resistance or support. In the current scenario, a Fibonacci measurement has been drawn from a peak to a trough, and the analysis reveals that the price is approaching a key level, specifically the 0.382 retracement level. The 0.382 Fibonacci level is often considered one of the first and most critical retracement zones. When the price begins to recover after a major decline, it usually retraces to this level initially. This level acts as a resistance point where investors reassess their positions. Some may take profits while others may reinforce their short positions. Therefore, any approach toward this level represents an important turning point in technical analysis. Looking at the current price action, the recovery move from the recent low within the broader downtrend is nearing the 0.382 Fibonacci level. This level may have previously served as resistance, or it could be getting tested for the first time. In either case, a successful breakout and sustained movement above this level are crucial for the market to potentially enter a new bullish phase. A move above 0.382 often signals a possible progression toward higher levels like 0.5 and then 0.618. Breaking above this level in technical analysis is more than just crossing a line. It reinforces investors' belief that the price is exiting a downtrend. If buyers become more active at this point, it increases upward pressure on the market and can trigger a new wave of buying. This is why the 0,382 level is often seen as a threshold that must be broken. On the other hand, if the price is rejected at this level, the move is likely just a temporary correction, and the market may return to a downward trajectory. For this reason, the price currently approaching the 0,382 level is a development closely watched by all market participants. If this level is broken, it often signals a renewed sense of confidence among investors and a strengthened belief in the upside. A breakout supported by volume would confirm that this level has transformed from resistance into a new support, potentially signaling not just a short-term move but the beginning of a medium to long-term uptrend. As the price nears this level, many investors begin making strategic decisions. For example, those who have been watching this level and planning to enter positions post-breakout treat this area as a wait-and-see zone. If the price breaks through decisively, it creates a favorable environment for opening positions. Conversely, if the level is met with concentrated sell orders and a rejection occurs, some investors may interpret this as a signal for continued downside. Therefore, the 0,382 level is not only a technical point, but also a psychological reference that influences market balance. Another key consideration is whether the price can hold above this level after the breakout. A brief touch or wick may not be enough for investors. Instead, a closing above this level is preferred, confirming it as new support. In such a case, investor confidence grows and new buy positions are likely to follow quickly. This would allow the price to move more decisively toward the next Fibonacci levels. When examining the recent price action on the chart, it is evident that a highly critical and decisive technical level has been breached from an investor's perspective. The fact that the price has moved above the 200-day exponential moving average, EMA, is not merely the crossing of a moving average. It also signals a significant shift in market psychology. This indicator, frequently used by medium and long-term investors, offers serious clues about the direction of the market trend. The current price movement, with its approach to and subsequent breakout above this indicator, marks the beginning of a process that should be closely monitored. The 200 EMA is often considered a trend-defining tool in technical analysis. When the price remains below this average, the prevailing market sentiment typically suggests a continued bearish trend. However, if the price breaks above this level, it is generally interpreted as a potential shift in trend, from a bear market to a bull market. At this point, the move from below to above the 200 EMA is not just a technical event, it also reflects a change in investor behavior and overall sentiment. This observed upward breakout is considered a very strong signal. Large-scale moving averages like this one are often on the radar of many investors, and such crossovers can trigger strong waves of buying across the market. Indeed, the current move confirms this dynamic. The 200 EMA is for long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.